Good morning, everyone. This is Anne Marie. Today is Monday, December the 10th, and this is your SPY outlook. Looking at a daily chart here, I have been on holiday for the last week and a few days, and getting back into the swing of things at the pace that I run. It's very necessary to recharge my systems, otherwise it'd pretty much fall apart. So, after a little bit of a holiday, I am back and ready to take a look at the SPY. Now, here we are on the day. A couple of things have occurred. One thing I want to express to you is how symmetric the market has actually been, or how similar the waves have actually been of late. And let's take a look at this one. This is a wave that's 71 days long. It takes us from 127 to 148. Its retracement event, approximately 61.8, took a wick below it, but essentially 61.8. Here we are, here, this big wave, popping into the 61.8. Now, let's assume, sorry about that big breath right there, let's assume that what we are doing is we're going to come into the tip of this, all right? Let's assume that we are going to get a wick here, just like this one. We're going to get a wick up here. And that event looks like maybe 143.56. So let's take a look at that. Let's readjust this. And say that's the number that we're going to have to essentially breach in order to consider more upside momentum. But what we have been looking at is 61.8. Once more. Now, if we take a look at this wave, this very last one, the move from the base here to the tip here, that's also 61.8 with a little bit of a wick. This move here is not quite 61.8 at all, but let's go back to something bigger and more common that we see that a lot of people are used to trading and are comfortable trading, and it's these moving averages. We're clearly caught in between and around some major moving averages that we should be thinking about. And so as we've breached the daily, which is this lighter one right here, we breach the daily here, what we are looking at is a breach of this level. Now let's take a look at something else. Here's a low, here's a high, here's a higher low, here's a higher high, here's a higher low. This is the first time that we're looking at something where potentially we have a lower high. Again, the breach of this level up over this 143.52 is probably going to telegraph a move up into this region here at 88.6. Not really sure why that says 88.7 right there. 88.6 is what we'll be looking at. So that 88.6 is going to be a general reversal space. Now, it was my contention before I left that we would have pretty much sideways action for the entire week, and essentially we have, but it is grinding a little bit to the north. Why is it that we continue to be sideways, and will probably continue to be sideways until we figure out this fiscal cliff business? Yes, well, the market does not enjoy this space of indecision, and so it's waiting here for something. Now, essentially, it's not going to matter in my mind, just so long as the employment numbers continue to get better, the housing numbers continue to get better, and so on and so forth. As those numbers get better, we are going to continue to climb. If they begin to fall off cliff, we are not going to continue to climb. So it's really as simple as that, right? You don't have to throw in your macro thoughts about whatever. This is not the place for that, right? If you have macro thoughts and you are trading on them, probably this video is relatively worthless to you. And so I would say that, well, I'm not going to say that, but I would say this: macro ideas are not relevant trading ideas if you are trying to pay attention to natural rhythms and using the market in a technical space. It's just not necessary, right? It's good coffee table chatter, nice for the parties, not going to make you money. So just pay attention to what the chart is doing for you. Realize that a lot of these things have been breaching up over wicks. This is a wick that's particularly important. And so we're going to be looking at it as a threshold. If it comes in here, stops dead, and then begins to reverse, then we know what we've done is we've got the X, A, B, C leg completion of a bullish Gartley. Now, a bullish Gartley pulls us all the way back down into 78.6. So 78.6 is going to be of extreme importance eventually as it turns to the north. Because we are caught in between moving averages, we're also likely to have choppy action. And we really have not resolved very much outside of those, except for Friday. That gave us the first resolution event up over the daily. All right, so still caught between the moving averages essentially if this thing drops, and that's going to make for more choppy action as people try to determine where it is that we're going to go. What's the bottom line? Right now, pre-markets are down a little bit, so we expect that we have a pullback and a test again of this 141.89. I believe that we are going to continue to be range bound until the hill determines what it's going to do and releases it. Essentially, after that, we should continue to move to the upside. If indeed the numbers begin to fall off in other spaces, or we have something catastrophic across the pond, or in Asia markets, we've got a whole other story, but essentially we seem to be grinding ourselves to the north. Look at all the moving averages. Essentially, we are northbound, only grindingly so. All right? So, pay attention. Not a place to take big sizes unless you're scalping, and you're very good at that. A lot of us try to scalp, and we're horrific at it. So I would just say be cautious if you are intending to scalp, and don't look for a trend to continue. As a matter of fact, if we take a look at, let's say, a 30-minute chart, we're just going to look at a few days, what we can see is the following. These jagged spaces that move us down, right? Let's say we come in and we see the prior day's low, and we get in at the open and we say, all right, well, I guess it's a short on the day. There's the reversal event, and it pulls us up. And then everything else is pretty much jagged. Now, December the 3rd seemed to be a pretty nice running day. And December the 4th, again, more reversal. So you see these jagged V's that we are having. They are not giving us clean trending lines. But overall, we're making these higher lows and higher highs. Except, of course, for the last one that we had on Friday, which gave us our first lower high of the sequence, and so we always need to pay attention to that. Okay, good luck today and stay alert.